What does loan quality mean to lenders today?
It's very interesting, Tony. We are a retail lender, and we're also a correspondent lender. And historically, in our portfolio, the retail loans have performed twice as good as the correspondent loans. Very interesting, because we look at every loan. But for some reason, the quality of the correspondent channel is dramatically different than the retail channel. And I think it all stems from, again, coming in the door. So the originator that we have working for us on the retail side is looking at a loan a lot different than the correspondent side. So we're fishing in a different pond. Years ago, I went to a trout farm, and my brother-in-law was with us. He hates trout. He hates fish, and he says to the owner, he says, "I eat fish, and I don't want my kids to catch big ones. Where are the little fish?" He says, "In the pond up there." And so he went up to fish, and actually they caught the biggest fish, and he was very depressed. So I think fishing in the wrong pond is something that encourages quality. But we are very proud of our quality. I think as a lender, you should be proud of your quality, especially if you're a portfolio lender, such as the Provident Bank. So we take pride in that. And when it goes bad, then we're kind of upset as well. And in the last few years, we wondered if we actually could underwrite a loan, the way the delinquency has gone. But if you figure 80% of the people that have defaulted on their loan or have lost their jobs, then you have sort of something to hang your hat on. But yeah, quality is a big thing. I just wanted to mention, our QC partner, we outsource to a QC firm, becomes a real critical part of our quality. And we've had QC firms that are just there for the numbers and the figures and this, that, and the other thing. And then we have ones that actually become partners with you, and they give you a heads up. Look at this, watch out for that. And those are the QC partners that help us have a quality product. Because they bring to the table that they've looked at 16 other lenders, and this is what's going on in the industry.
How do we ensure true loan quality?
Especially with all the different guidelines that have come down as of late over the last several years, sticking to a traditional paper file, typical paper process it's very binding. It limits you on what you can actually see, who can actually help and collaborate in a file, where as an e-mortgage process or an electronic document process or whatever you want to call it, it really frees up a lot more collaboration space. I know that word was used quite a bit today so far. And it's true. You're allowed to have more people. There's more visibility, more clarity, more transparency around a file. You can see where it's been, where it's going, and you get much more, trust behind a lot of things, a lot more accountability up and downstream from different people in the process. And it just makes things that much more cleaner when you're actually coming out. So when there are questions around a particular file or maybe a series of processes, it just kind of paints a much better picture of what a traditional paper file, traditional hard copy file process might look like.
How does data usage enhance loan quality?
You know, it really is, it's much more than collecting the data. It's really collecting it and having the parameters in there. And so if you get bad data, you don't let it process and catch it in QC, you catch it at data entry time. Like he mentioned, somebody has a 4-digit FICO score, there's something wrong there. So your system has to have those kind of rules in there, and they have to be adaptable and easily to change. So I think it's a big process. I think we're going through it. We talk about this assembly line, will that change? I kind of think somewhere down the line, the loan process will be a little different in the coming years than what we see right now.
Mortgage process, borrowing from my good friend Larry's kind of theory on this, is really the assemblage of a past series of data. If you go back 20-plus years, it was all paperwork, right? And so you wrote on the paper, then somebody looked at that and underwrote it, and we've slowly moved away. The original loan origination systems were really just kind of electronic applications that begun that data process. We go into MISMO to try to define fields as they move across the different aspects from origination to underwriting to servicing and the different places this touches. So we really have moved into this data world. So now, as you're taking a set of data, that's all a mortgage is, and you move it from one application, which is making sure that it's appropriate to lend to the borrower, and move it through the underwriting, which is part of that process, then you move it through the secondary marketing, and finally the securitization. It's really the same data used for different purposes. And so assembling that, interpreting it at different stages, it's very important still to have an underwriter looking at the relevant pieces and interpreting it. You can automate much of it, but not all of it, right? So you automate the 90% that you can so that the people can focus on the 10% that isn't automatable.
I think that making the source entry electronic as much as possible, forcing it into part of your process, making sure that you guys have built or adopted technology that allows those sources to come in and data, so because you're right, getting data in later in a piece of paper and trying to scrub it is nearly impossible without having a person look at it. So if you can actually invest in the technology, and then if you've done your research and you find, well, I can limit the business I do to only the sources that can send this to me electronically, then you've done it. So you have control over it. I think you just have to take the first steps and expose that entry point at the very beginning, at the takeoff, and make sure it's coming in as data.